Hello, I'm Garrett Smith. I'm the CIO of Pillars Wealth Management. I'm also the primary portfolio manager for Anadr's Capital. It is June 26, 2024, and this week I want to start a series of videos. We're definitely going to discuss this more next week as well. The theme talking about the U.S. stock market concentration. So, how concentrated is the market? And what that means for you as investors. Now, over the last 6 months, this topic has been written about quite heavily. There's also been a large number of people in the media talking about this topic as well. So, what I want to try to do is distill some of the noise. There are certain things floating around that factually aren't correct. But then there are other issues that I think aren't being well discussed. So I'm going to try to fill in that gap for you all. Um, so if we look at the stock market concentration, so here we have the S&P 500. Now, the first thing to note, or at least the thing that I think is important to note, is that the S&P 500 is not the U.S. stock market. However, it is by most people's agreement, it is the best representation of large capitalization U.S. stock. And so it's representative of big publicly traded U.S. companies. So that's factual. Um, by value, most of the value of U.S. public equity can be found in the S&P 500. And that is partly because the largest companies, the S&P 500, represents a majority of the U.S. stock market value at any given time, while there are mid cap, so mid-sized companies and small cap companies by value, since they aren't as large, the total value is almost always dominated by the S&P 500. Now, when we talk about market concentration or the level of market concentration that we're seeing, we're really talking about within the S&P 500, within the big um, companies in the United States, how is that concentration looking? And so we can see in this graph, we have the 500 S&P 500 companies, and then we just have by percentage, how does the distribution look? So we add up to 100 at the 500th company. So from the display, this starts at about three companies, just the way that it's graphed. And so we can see that three companies account for about 24%. I guess this is actually maybe two, but three companies is right there, and it accounts for about 24% of the S&P 500 right now. Um, we hit 50% at about not about actually it's almost exactly 29 companies is just about 50% of the S&P 500. So we see that a very small number accounts for the majority or half of the total value. So it's a very high acceleration, and then it tapers off. Now, if we were to look at 10 companies, 10 companies right now account for about 37% of the total value. So those are the facts. Now, does that necessarily mean that the market is riskier? No. Does it necessarily mean there are reasons for concern? No. Um, has there been points in time where concentration has looked like this before? And so if we switch to this graph, the answer is yes. So this is taken from a piece that Morgan Stanley did last week. And so they graph going back to 1950, the concentration of the U.S. Stock market, the S&P 500. And so we see now this ends in 2023. So at the end of 2023, it was 27%. Now, as I mentioned earlier, that number is almost 37% for the top 10. So The market peak for the top 10 historically, or at least since 1950, which is pretty much the historical top, was right about 30%. So now we are above what we were in the past. But we have seen high market concentration before. Top three and top one. So the top 1% now is about 8% of the market. So we see that the highs were in 1962. So on any measure, 1, 3, or 10, we now are greater than the historical highs, but not by much. What we can see, though, is the concentration has picked up considerably since the mid 2010s. So in the deeper dive video, I'll give some context to that if you're interested. And then next week, again, I want to highlight, well, what does this mean, or what could this mean for investors? But really try to contextualize things and dispel some of the, let's say, the myths that I've been seeing or reading in the different outlets. So I hope to see you then. Take care. Bye bye.